Good morning, everyone. Happy Tuesday. Today is May 28th, and welcome to our tax savings live chat. Again, I'm Chris, a Waikoko financial planner, chief marketing officer of Waiko Tax. This is an all year round, all in one accounting and wealth planning service solution. And we are going to discuss about how you can maximize your contribution, your investment, increase your cash flow, but not your taxes. For those attendees, welcome. And what we're going to do is we're going to have a presentation. This is only less than 30 minutes. All the questions, you can type it in the comment section. And we also going to talk about this after the presentation. We can entertain questions. All right. So let's get started. Before anything, you can always follow us on our YouTube channel. There you go. So this is our Tax Savings Tuesday. The presentation will have a replay on our YouTube channel. So today we're going to talk about the strategies, what is the 401k, the Index Universal Life, IRA planning, and we're exploring the tactics for maximizing the benefits of a 401k plan, including contribution limits and investment allocation. We will delve into the unique features of the Index Universal Life and also the individual retirement account, just the basic. All right, so this webinar agenda will only last for less than 30 minutes. The question and answer session are encouraged, and participants are also encouraged to type the questions. We also have a free 10-step business improvement checklist that you can download on our website. It's www.wicotax.com. And be part of our YouTube channel, our gift raffle. We're raffling gift cards by following our YouTube channel, Chris Waikoko. Disclaimer that this material has been prepared for informational purposes only. It is not intended to provide and should not be relied on tax, investment, legal, or accounting advice. Example and other materials in this webinar are only for illustrative purpose and should not be relied upon technical answers. Wycotas is a virtual outsourced accounting and wealth planning company, and we are not associated to any institutions on the presentation, and it's a private business providing resources for small businesses. All right, let's dig into it. The attendees, if you are small business owners, just type in the box your name and what city you're from. You're self-employed, work from home, people that receiving 1099s. These presentations are also meant for S corporations, LLCs, partnerships with or without employees, e-commerce, and high net in non-accountants, of course, and high net individual making $90,000 a year because 2022 is the tsunami of the IRS. So that's why any investment, you have to make sure that we are compliant and the necessary form, whether you withdraw your 401k is being submitted on time. Those are the 1099R. That's you want to avoid that kind of red flag to the IRS. So before anything else, we need to classify what is our taxation of 401k, what's taxation of the IRA, and even the life insurance. So as you can see on this category, there are three investment assets that fall into one of the three taxation categories. So number one, there's taxable, which is your month-to-month salary, your W-2, your 1099. So they are all taxable in a year-to-year basis. Okay, now when you have taxable, you also have an option to park your money on the two buckets, which is the tax deferred and the tax free. So on the tax deferred, as you can see on the middle, these fall under traditional IRA, self-directed IRA, 401k, and then 403b, then annuities. So all when you put your money here, they are not being taxed every year. Actually, like especially 401k, they offset your taxable income for the current year. Now, on the other side, the tax-free income, these are Roth IRA. This is very popular. And then we also have municipal bonds and then the CV life insurance. CV means cash value life insurance. So this is what you call the process of diversification. It's allocating your money to different tax sheltered account like tax deferred or tax free. All right. But before you make any investment, what are the rules or what are the tips you need? We need to identify what are the benefits and the 401k benefits and the Roth IRA benefits. So the benefits are the following. Number one, For 401k flexibility, it's offer a wide range of investment options to suit various risk tolerances and financial goals. So number two, the tax benefits. Any contribution you make for your 401k are tax deferred. So reducing taxable income now. While Roth IRA contributions are made with after tax bills. So which means to say when you withdraw your Roth IRA are tax free in retirement. So that's why they have different use. So the 401k, it offsets your taxable income, where the Roth IRA, when you withdraw the money on your retirement, it's tax free. All right. Now, number three, we also have the employer match, which is many employers matching contributions to 401k plans, effectively giving your free money towards retirement. So, a lot of companies, especially W-2s, they do match the 401k. But the question, if you are a sole entrepreneur, let's say you have your own S corporation, or you're a freelance, can you have your own 401k? The answer is yes. That is what you call the solo 401k. And if you need more information, we can have a 30-minute session on how the solo 401k works for your company that upsets your taxable income also if you have your own business. However, what are the drawbacks of the 401k and Roth IRA? Number one, there's a withdrawal penalty. The early withdrawals, there's a 10% withdrawal penalty from your 401k. And there's also certain time that you can withdraw this money. The Roth IRA accounts can incur penalties and taxes. And then number two, so that's why you have to make sure, especially I know 401k, you are allowed to withdraw it at the age of 59 and a half to avoid the 10% withdrawal penalty, early withdrawal penalty. Also, number two, you need to understand that there is a market risk. Any investment whenever or wherever you put your money, there's investments on this are subject to market fluctuations, which can impact the value of your retirement savings. So that's why there are some clients that we have that they took up their money from their 401k because the principal they loses the principal amount of money that they put. So that's why you have to be careful about the risk and analyze the risk of your investment and whether how much you can tolerate on that. Okay. Now, on the other hand, this is the tax. There's so many tax sheltered, and one of the ones that we have is life insurance, the cash value life insurance. The benefits are the following. So, number one, the Index Universal Life provides lifelong insurance coverage. We suggest if you want to have this kind of insurance, it's basically for protection. It offers death and then living benefit. All right. So if you are just new about investment, you don't want to touch your investment for certain years. You need to make sure that in any case of death of the family, let's say the head of household, the mother or the father, there's a lump sum money that you guys can access without being taxed. And this is through the form of life insurance. So Index Universal is only one form of life insurance. There are other life insurance you can check whether it's term, whether it's whole life. So it's up to you which one works convenient on your budget and your needs. Okay. So while you're growing your money, you need to make sure you have lump sum access of a tax-free income. Another also is if there's no death or dying, life insurance can be used as a living benefit, which means for any medication, hospitalization of the father or the mother, there are accessible money that can be used for the treatment until they recover from certain sicknesses. So that's why it's lifetime coverage. The number two benefit, tax advantage growth. The cash value component of the IUL, Index Universal Life Policy, grows tax deferred, and policy loans and withdrawals can be tax free if it's structured correctly. The Index Universal Life could use for education of the kids, putting up a business after 10, 15 years that you've been paying to this policy. You can Index Universal Life could be your own bank as an emergency fund. I do not always suggest. I do not always present this as an investment. This is basically more like protection rather than investment. And then after the protection, this is an emergency fund that you can use instead of loaning to the bank. After 10 to 15 years, you can loan money to your own insurance policy that are tax free. Okay. And whatever you use, especially Filipinos that have extended family in the Philippines, you need money for medication of your family members in the Philippines instead of withdrawing money to your savings or checking account or withdrawing money from your emergency fund, your 401k, you could use the cash accumulated growth from your index universal life. All right. Then number three, market linked growth. The cash value component of the index universal life policy grows tax deferred, and policy loans and withdrawals can be tax free. It just need to be structured correctly. Okay, so that's why it's better that you have a financial planner to check on your current policy. And then number four, flexible premiums. The cash value component of an IUL policy grows tax deferred, and policy loans and withdrawals can be tax free if again is structured correctly. Okay, so the complexity, these are some of the disadvantages of the index universal life. IUL policies are complex financial instruments with various fees, caps, participation rates that can be difficult to understand. So you kind of need to know those fees and you have to know those charges. Number two is the performance risk. While the cash value can grow with the market, it is also subject to caps and participation rates, potentially limiting upside gains. So what I'm saying is it's better for you to have at least twice a year meeting with your financial planner to check the performance of your insurance or your whatever investment you have with them. And then number three, you also be aware of the surrender charge. Withdrawing money from each cash value or canceling the policy early can result in significant surrender charges and penalties. So you have to know when is the minimum time that you will no longer going to pay any surrender charge and penalties when you invest your money here. So what are the following takeaways? Each option has their unique benefits and drawbacks, and the best choice depends on your individual financial goals, risk tolerance, and overall strategy. Number two, present to your financial planner your current investments, insurance, debts, income, mortgage expenses, because this will provide a financial blueprint and create a financial roadmap. So do not just invest without knowing what you currently have, what existing current income sources, investments, and then what is your number three. If you have a business, it's a great leverage on increasing your cash flow and investments, but not your taxes. So you also need to tell them whether you have an S corporation partnerships. That's why we are here. We are a team of accountants and financial planners who would work hand in hand because your financial roadmap is like a house. There need to be an internal and external structure. All right. And then number four, tell them what would be your next plan on next 5 to 7 years. Like go are there major expenses like going to school, buying new house, moving to a new company, or how many dependents, including your parents and extended families. So those are all part of the overall financial goal in terms of investment. So that's why here in Wyco Tax, the benefits of outsourcing this, and we are here virtual. You have peace of mind, you save headache, save time, and then eventually we also process. It also gives you more faster access to loans and grants because we already have your financials ready. Okay, and then the Wyco Tax is stand by its name that we are worry-free, year-round, competitive, and on-time accounting and wealth planning service solution in the US. This is how we work with our clients. The one that we discussed is slice five. We develop you a 10,000 tax savings pizza pie chart, but for us to do that, we need to go through your entity. Slice one, then your record keepings two, and then three are the expenses. Then, if you are qualified for any tax credits, then at the end of the year, we do the tax filing. So that's why we are an ecosystem of financial services for your company. And we have a one-time offer if you would like to bundle your accounting and your tax filing and then record keeping for 2023. We are giving a $523 discount. So all you have to do is avail and contact us and book your appointment today. And then we also do financial review if you don't have any company. We check your finances. All right, so connect with us. You can find us on YouTube, Instagram, Facebook. You can find me also on LinkedIn and join our group on YouTube. Subscribe today. So there you go. That would be the summary of our presentation today. So now, if you guys have further questions, let us know, and our contact information is provided. So Anna, thank you for attending. If you have question, let me know. And again, because here in a Waiko tax, we increase your cash flow but not your taxes. Thank you for watching.